Investments weekly market update. All information is gathered as of June 24th, 2024. Let's look at what's going on. The week in review was a positive week for stocks last week as the S&P 500 was back to near all-time highs. Large cap growth stocks, which is the Russell 1000, are now up over 20% year to date, while the large cap value are lagging but still up over 6% in 2024. Bond performance, the U.S. aggregate, was down last week on slightly higher U.S. Treasury rates. With the decline of last week, the U.S. aggregate bond index is once again down for the year. Let's talk about economic release, the upcoming report. The core personal consumption expenditure, which is core PCE, will be released this Friday, the 28th, and the Federal Reserve monitors the core closely as a measure of inflation trends. We're seeing a lot of that with inflation. It's still a little sticky, but it's starting to come down. Market outlook. The concentration level of the top 10 stocks in the S&P 500 continues to be a focus of conversation. Our opinion is that while concentration alone is no reason for concern, it remains important to diversify. Grading continues to own many of the largest stocks and have contributed to the 2024 rally, but are choosing to reduce our exposure to the companies and diversify into positions to better balance the positions in our portfolios. You got to do that with the portfolio. Sometimes one wins, the other one, they go back and forth, and if you're just too heavy the other way, you're going to miss the other side. So that's what we pay them the money for, right? To make sure they're properly, every quarter, reallocating. Let's look at recent activity. The contrarian choice portfolio was rebalanced. JP Morgan and Cigna were sold, while Home Depot and Visa were purchased to put them into that portfolio for the balancing. Stocks in the news, Accenture, which is owned in the G50, reported earnings that missed expectations. Despite the miss, the company provided information that generative AI bookings were over $2 billion year to date. Also, Target, which is owned in the Core Select, is planning to launch a generative AI tool to all of its nearly 2,000 stores by August. The tool, called Store Companion, is a chat box meant to answer on-the-job questions and support store operations. You're going to see a lot more AI things happening right now in the world. Also, what we're finding is, one of the things we're looking at the bond rates, everybody's like bonds, that's around the safety. Bonds, we can see them once the interest rates go down, the values will start to come up, but of course, don't be afraid to look at the fixed annuities right now, the fixed index annuities, which are guaranteeing 5.5% over 5 years, or just about that right now. We're going to see those come down a little bit more down the road. So it's very important to make sure we're properly allocated. We're seeing our Core Select portfolio perform very well year to date. The G50, because it's such a value-based portfolio, it's only up 3, 4, 5% this year, but over the last 14 years, it's averaged over 11%. So those are the, that's why we don't really chase returns. We just make sure we're properly allocated all the way through to make sure that we're taken care of and your money's taken care of. That's it. Thank you so much for being part of the Vitale Wealth family. We look forward to seeing you again soon. If you have any questions, call us at 855-756-5700. Visit us at vitalewealth.com. Make sure you share this with your friends and family. Anybody who's looking to retire or has a question whether they can or not. A lot of the big three right now, we're seeing people getting laid off, unfortunately, let go. And, they're saying, hey, can I even retire? I don't know if I can or not. Come to me, let me show you how, because it's very possible if we do it the right way, it can work out very well. God bless you. We'll see you again next week.